What's up, team? Welcome back to another daily recap over here at High Performance Trader. Today, I want to break down a phenomenal trade we took. I had some members today on the Discord want me to dive in a little bit further on this trade. So I want to dive into the criteria we were looking for, what made me actually pull the trigger, right? Because there are tons of buyers off the open, and you're going to see right here, I want to show you guys exactly why I got in this trade. So we took this trade on SPX. We cleared 68% ROI on this trade. You're going to see we're getting tons of buying off the open, and we're ripping into previous day high, right? This on a 2-minute time frame. I want to show you guys exactly which made me pull the trigger, because today in this video, we're going to talk about buying acceptance, right? So I was talking to my friend Darren, right? And we got to really speaking on what our skill represents, right? And if you ask me, we spend all this time as day traders to develop a skill. And what that skill is, it's extremely valuable if you have it. It's being able to identify acceptance. What is acceptance? Well, that's a phenomenal question, right? So let's break right into it. This is the chart over here. I'm going to make this a little bit bigger. So to do this correctly, I'm going to pull out the Discord real quick. We're going to go over the pre-market plan just to get an idea of what I was looking at in the beginning of the day. All right, SPY pre-market plan, bullish scenario, watching for buyers to step up and defend the 1 hour 50 EMA. This is so important. Guys, this is so important because this is what gave me the confidence to enter longs today, right? Look at the 1 hour 50. Right? We have this 1 hour 50, and this is our tool. This is our guideline. This is my hidden superpower. This is what I use every single day when distinguishing a bias, right? So a bias is a direction, an understanding. Let me turn this light on. A bias is who's in control of the market. How can I tell? I look at the chart, right? I don't just look at the chart. I look at the 1 hour 50, right? The 1 hour 50 is going to give me the context that I need. It's going to help me understand the story. It's going to give me the confidence to be able to really get into the market and go, hey, buyers are controlling the 50, so I am going to take the market either long based on acceptance, right? So now let's dive into acceptance. So that was the pre-market plan. I'll go over the bearish scenario real quick too. Looking for him to take open print for longs targeting previous day high. Okay, cool. Bearish scenario. Watching for sellers to defend trend. Continue to defend it, right? Sellers are in control. Look, they're holding. They've been holding for the last week, almost 2 weeks, right? So I'm looking for them to continue to defend trend at the 1 hour 50, developing bearish structure off the open for short plays targeting, et cetera, right? So what's really cool about this, right? Bearish scenario. I'm looking for sellers to control the trend. But if they don't, now my mind is going to switch to the bullish scenario, right? It's a 50-50 approach. This is what I teach all my clients, right? It's what I call a 50-50 perspective, right? It's very important to have this perspective because there's going to be times where you're looking at the chart and you're like, dude, I don't even know what I'm looking at, right? But if you can understand what you're not seeing, it's going to help you make better moves, better decisions, right? It's going to give you the confidence, right? And be like, oh, listen, buyers are controlling the 50, so I can't be bearish. You see what I'm saying? So the more you know what it's not supposed to look like, the easier it is sometimes to help you actually pull that trigger in the proper direction, right? So that's the bullish and bearish scenario. So now going into the day, right? I have the 5-minute out. Remember, we're watching that 1 hour 50. So I'm going to pull that up as well, right? I'm going to make the chart a little bit smaller. Let's do this, pull this. This is the 1 hour. So we're coming up on the 1 hour 50. And you could see here in pre-market, sellers rejected it. They were trying to defend that position, right? So now if I whip out the 5-minute, you're going to see we're getting the HPT cross, ladies and gentlemen. It's very simple, moving average cross. But what does it tell us? That sellers aren't in control. Right? So it's crazy. If sellers were in control, they wouldn't have allowed the cross to happen, and especially not with the strength that it did. Right? So that's one of the ways I like to approach the market, right? I go, all right, if sellers were in control, right? They tried to defend the 1 hour 50 right here, right? Price comes down, rifles above. We get the HPT cross. Okay, now I need to get in the trade. We rip up in the previous day high, and I'm still not in a trade, right? Because I need to define risk, right? And if anybody traded today, you guys know the risk was insane. And what I mean by risk is to get in this trade, it was extreme. You were making yourself vulnerable, right? And what I mean by that is you were to enter this trade properly, it would have felt like you were chasing it, right? So that's a big issue. This is where learning to identify acceptance comes into play. Because what's the difference between chasing this or really identifying risk and controlling it and controlling your entry, being very specific with your entry, entering with intention instead of just entering because you don't want to miss it, right? That's a big thing to really learn and get better at, right? So now I'm going to whip out the 5-minute time frame. We get our cross and we rip in the previous day high, right? So let me just get rid of this. I don't know why. It's 2 of them. So now price comes back down into the cloud and into the 9D EMA. So everyone on my Discord is probably sick of me saying this, but you must learn to use the 9 double exponential moving average. It is an absolute game changer. This moving average helped me enter longs today with confidence. So let's whip out. I ended up going long on this candle right here, right? So we rip into PDH, and as we're approaching previous day high, I go, okay, if sellers are in control here, they're going to show it. But if buyers are in control, they're going to show it. How are they going to show it? Well, I want to enter in on a healthy uptrend. What's healthy? Price is hugging the 9. There's no extension here. Right? Price is hugging the 9D EMA. This is a healthy trend. I've studied them over and over. These are the trends I want to get into. These are the ones I want to be a part of, right? What I don't want to be a part of is a super far extended trend. This is hugging price. Now I just need an entry, right? This would have been a good RBI, but the reason why I didn't take that one is because on this 5-minute candle, we are extremely extended from the 9. Right? When price looked like this, look how extended we were from the blue line, right? We were 60 cents away. Anything over 50 cents is extended, right? So I want the blue line to catch up, and notice it had to catch up. Look at the pullback. Pullback, red candle, right back into the 9D EMA, green bar, red bar, ignored. I'm in the market long. My stop is below 572, right? So if we come over here to SPY alerts, you're going to see over here, this is what I threw out in the Discord. I hopped in longs with a stop at 572, right? Right here, red bar, ignored. So right here at 572.80, I'm in the market long. I got in around 572.65, right above that red candle, right? So I was intentional. I was like, what does acceptance look like? Well, it looks like a healthy trend, no extensions, right? Buyers control the 1 hour EMA, 50 EMA, that's bullish. That's not bearish, right? We could all agree that's not bearish. That's all I need, right? There's no golden edge. There's no golden strategy. Why and how did I have the confidence to take this? Well, I'll show you. We got in the market long right here at 950. I bought one SPX contract. Stop right below 2-minute red bar. Look at that, guys. Red bar, ignored. Stop below it, right in the previous day high. We're using the critical level not to assume a reversal is going to come. Instead, we're going, okay, we're at a critical level, right? The critical level is critical because of the volume. So based on what the chart pattern tells me there, I'm going to trade with that bias. If I get a red bar that's completely ignored, I am going to take the market long. I'm going to trade with buyers, right? Risk reward is right. It was hard, but we took it. Looking for a trend to hold. 9D EMA on 5 minutes. So what I'm doing here is communicating to the team, hey, as long as buyers hold the 9 double exponential moving average, I'm going to long the market through previous day high, right? And that's what we got, guys. You can see money shot, price rallied. Bless you, Jen. Booked it at around 78% ROI. Look at this, just cooking right through it. We got our critical level up there at 57439. It was beautiful. Target hit. I mean, look, it's crazy because this trade was very uncomfortable, right? It was very uncomfortable, but you know what helped me with it, right? You can see here I was able to get a quick snapshot a little bit before I got out of the trade here. But notice here too, we rally, red bar, ignored, price comes down, tags the previous high of day. This is also a high of day break, right? Very nice, very beautiful, and rally, right? This was a monster, beautiful trade. And guys, I'm not going to lie. What gives me the confidence each and every single day is this right here. So ready, watch. Let me do this. I'm going to show you guys how I do this. You can see this was yesterday. This was yesterday, right? HPT crossed to the upside and to the downside, right? Trusting the edge, trusting the strategy, right? I send out PDFs to everybody on the team. This is the strategy, right? So what I'll do is I'll go, all right, daily recap. I need to log this, right? Because this is the trade that we took. Go snapshot, bing, snag that. And then we'll come here into trading metrics, HPT crossover, boom. Happened before 12. This is all of our criteria. Bam, logged, right? So what this does, guys, is it gives me the confidence to go, hey, all this data, when I see this crossover, this green HPT indicator going, hey, Josh, the indicator, listen, I don't know what's going to happen. I'm not telling you to go long. All I'm telling you is buyers are showing up. Buyers are here. How do we know this? Not because we're assuming it, not because we're predicting it, but because the HPT cross happened. See, one of my most detrimental, destroying issues I used to have was I would always try to predict things. I'd be like, oh man, we're ripping in a previous day high, guys. Sellers, they got to come in. Why do they got to come in? Well, because I missed the long play, I would assume sellers were going to come in at previous day high. Now, assuming will get you killed. If you're walking down the streets in New York City and you're assuming the taxi driver is going to slow down, that will get you killed, right? If you just assume that you can eat however you want, not take care of yourself, and just assume you're not going to get sick, well, you're going to get sick. See, it's not about being right. It's about being clear. It's about being aware. It's about not being ignorant to the fact that you have a tool that's telling you, hey, buyers are here. How often does it work? Well, last month we had a 72% win ratio. The month before that, we had a 72% win ratio. See, data is the way. Collect data, study the data, right? I didn't just learn this stuff, right? I wasn't just like, oh man, I love the 9D EMA. I started to love it because every single trade I log, I take. Look at this trade right here I took, short play. Why do you think I took it here instead of right here? Look at the 9. Look at the 9D EMA. I have studied it. I study the trend. I don't just go, oh, beautiful move down. I go, what'd the moving average look like? Well, let's go back and look at the data. Allow the data to tell you what to do. Not this. Never let this, your heart, make the decision. Let the data make the decision, right? I missed a trade last week because of this. I'm not going to let that happen again. Instead, I see my edge. I act. Risk reward in check. You have to take it, right? I was very proud of this trade. It was definitely uncomfortable, especially anybody that was trading today. You guys know. The volume was extremely high. It's election day, right? We literally, I don't know if that has anything to do with it, but there's a lot of news. There's a lot of volatility, but this is the thing. The volatility doesn't play a role in the data. There is a 72% win ratio. All I'm worried about is out of 7, as long as I trade them properly with appropriate risk, the other 3 will work themselves out. It's called risk reward, guys. I absolutely love you. I have to make this one quick. Thank you guys for coming. It was a great day. Go through the data, identify what's working for you. Join the team below if you want to be a part of a phenomenal team that puts in work and supports each other. I love all of you. I'll see you in the next lesson.